Welcome to the latest Motley Fool scoreboard. I'm on in Chocobaloo, and we've got longtime fools Toby Bordelon and Matt Frankel giving a 1 to 10 rating to a top 200 stock in the primary hidden gems database. It's American Express, ticker symbol AXP. First, we'll rate the strength of Amex's business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Matt's at a 7. Toby, you're at a 9.
Yeah, 9. Look, Amex, I love it. It's a closed loop model in the credit card space, right? Meaning they own the payment network, they issue the cards, they underwrite and extend the credit. They control the whole process with the credit cards, right? It's put them in somewhat of a unique position in the industry. The brand is very strong, too. It's a competitive space, though, which limits their growth and pricing power. And that also means, and I think what you're seeing at the high end in a lot of these cards, is it means a high marketing budget, right? Which is something that you've got to factor in there.
Yeah, I agree with most of the things that Toby said. Credit card industry is highly cyclical, which is why I gave it a little bit of a lower rating. And not only that, but the credit card business is kind of under attack right now. We've heard, the president wants to limit credit card interest rates to 10%. A lot of people on the other side of the political aisle are on board with it. So it creates an element of uncertainty, but really it's the cyclicality that I gave it a lower score for.
And Discover's the other one with the closed loop, now owned by Capital One, and then you got Visa and MasterCard, which are open systems. In other words, like a bank is underwriting the stuff, not them. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Matt's at a 9. Toby, you're at an 8.
Yeah, CEO Stephen Squeri, I hope I'm pronouncing that correctly. He's been in charge for almost a decade, since 2018. Done a great job. He's had a great run, right? He took over after the Costco fiasco when Amex lost that business. And he's done, I think, a fantastic job really building up that premium Amex brand to what it is now.
Yeah, no, I would definitely agree. You mentioned the Costco fiasco. Amex came back from that in spectacular fashion. Especially with the current leadership, they've done a great job of courting the millennial generation. I don't know anyone else who can get people to pay $895 a year for a credit card and be happy to do so. And it's because it's benefits that people want. And not only that, they get the third parties to pay for it. The Lululemon credit you get, Amex isn't footing the bill for that. Lululemon's paying for most of that. So I think they've done a great job of really adding value to their products in a really economical way. And it's a premium credit card product that is better than every other premium credit card product in the market.
For financials, a 10 is a fortress, a 1 is yikes. Matt's at an 8. Toby, you're at a 7.
Yeah, revenue for 2025 was a new record. Growth is still in double digits. Return on investment is quite good. The dividend growth has been nice as well. Now, there is a lot of debt here, but hey, it's a bank. That is just the nature of these things. So you shouldn't look at their debt levels and say, whoa, what's going on here? It's just how the business runs, right? But pretty good financials here. So I'm going with 7.
Yeah, and one thing I would add is that Amex has a very high quality clientele in the sense that they have much lower default rates than any of their competitors. It's less than their net charge-off rate is roughly half of what Capital One's is. So it's as far as credit card businesses go, the economics are fantastic.
Matt, let's talk valuation. How well will Amex's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
So I went with 10 to 15%. I think it's going to outperform the market. I think that just generally for bank stocks, it's going to be a really positive environment over the next 5 years or so. One, interest rates are expected to gradually come down, at least over the next couple of years, which would be a positive catalyst for consumer confidence, hence credit card spending and things like that. And just we're in a regulatory friendly political environment for banks. There are just a lot of positive catalysts in the banking space that could happen right now. I did give it a 6 for safety because I think that, as we saw, the last real recession, as I would call it, was the financial crisis. And you could see default rates that I just mentioned as a strength really shoot up to the double digits real quick.
Yeah, for returns, I went with 5 to 10%, a little bit lower than that. I think the competition we're seeing in the space and economic concerns and maybe some of those regulatory concerns are going to limit growth for a few years here. Safety is 7. The brand is very, very strong. A recession would cause issues, as it would for everyone in this industry, and send the stock down a little bit. Especially a recession that's credit driven, right, and leads to more defaults. You're going to have issues there, as Matt noted. But I still think it's relatively safe.
Thanks to Toby and thanks to Matt. They've given American Express, a strong overall score of 7.4 out of 10. No top hits, and Matt's owned American Express for about 15 years now. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Kratos. Till then, Fool on.